Hello dear traders, let us review what major events drove markets in the past week. The US dollar index ended the week 0.7% higher as investors upgraded expectations for a rate hike at September 2021 Fed policy meeting. The euro ended the week 0.6% lower and British pound fell 2% against the dollar. The S&P 500 ended the week 0.5% higher as investors re-evaluated comments of central bank policymakers about a rate hike soon. US stocks rebounded on Monday following Friday's sell-off after Boston President Eric Rosengren suggested that the Federal Reserve could resume monetary tightening soon. In a comment before a week-long media blackout ahead of September interest rate decision, Federal Reserve Governor Lael Brainard called for continued prudence in raising interest rates. The dollar weakened on Brainard's dovish comments. The S&P 500 fell on Tuesday as investors' confidence was undermined by falling oil prices. The dollar resumed advance as markets discounted the dovish comments of Governor Brainard on Monday that the central bank should be cautious and raise rates after inflation rises. US stocks slipped on Wednesday as oil decline continued and the dollar weakened as investors leaned toward discounting the likelihood of monetary tightening at Fed's policy meeting next week. On Thursday, all 9 members of Bank of England Monetary Policy Committee voted to keep the key interest rate at a record low 0.25%. Officials were also unanimous on continuing with purchases of government bonds and corporate bonds. However, Bank of England policymakers indicated there is still a chance of another rate cut this year as they assess the potential longer-term fallout from Britain's decision to leave the European Union. US stocks advanced on Thursday as bigger than expected declines in August retail sales and industrial production reduced the likelihood of a rate hike lower. On Friday, US markets closed lower as better than expected inflation spurred concerns Federal Reserve may move to hike interest rates. The dollar strengthened with consumer price index rising 0.2% in August on month. The major event this week is the Federal Reserve 2-day policy meeting that starts on Tuesday, September 20. We believe the central bank will leave the rates unchanged but will restate plans for hiking rates soon. On the whole, economic data last week were weak. Retail sales and industrial production fell more than expected, while the 1.1% headline inflation in August from a year ago was slightly higher than expected, rising from 0.8% in July. It is still way below the Fed's target inflation of just below 2%, though points to a positive trend in the right direction. The Bank of Japan also holds a policy meeting on September 2021. The Bank of Japan is expected to announce expansion of stimulus measures, but it's a close call whether the bank will further cut rates into negative territory. And on Thursday, the Reserve Bank of New Zealand will make its monetary policy announcement. No change in policy is anticipated here. One thing is clear: markets will be volatile, bracing for central bank decision. This was all for the past week. Thank you. Stay tuned.